What's going on, you guys? My name is Kyle. I am a full-time futures trader and founder of Opinicus. This video is actually a segment taken from a recent trading mentorship group where a member is asking me when to avoid intraday reversal types of trades. I do trade a lot of intraday reversals. However, there are specific scenarios when these trades are just not going to work all that well, and in most cases, not work at all. The times when these trades are not going to work, it's pretty easy to avoid most of them. Of course, we can't avoid all of them, but it is easy to avoid most of them based on the higher time frame context and what the higher time frame charts are showing us. Here's the clip from the TMG. Hope you guys enjoy.
I've been trying to trade PA a bit more now, and I just wanted to know, like, in what scenarios you wouldn't. So I guess if we
I could answer that. I could answer that super easily. So in what scenarios I would not? Yeah, that's a good reframe. When price is breaking a structure. So yesterday, this is a perfect question for yesterday's action. The second, I think it was around noon yesterday, the near-term structure started to break. That for me is hands off. Do not be grabbing those micro time frame longs down here because it's just a recipe to get run over. It is just a recipe to get absolutely steamrolled. So if we have a higher time frame structural breakdown, that trade is a no-no. I won't touch it. I will not touch it under no circumstance.
Okay, cool. No, that's kind of what I was trying to understand.
Yeah. So the difference on Monday is that I always kind of defer back. Let me look left on the chart. Do I have higher time frame structure? Monday, we're coming into support. I think we had a lot of volume through here too. So it's like, all right, well, I already know buyers are here. Yesterday, when the structure starts to break, again, it was around noon Eastern time. It's the probability that it's going to be a trend day lower is at that time much, much higher. So you have to be focusing on shorts. Do not grab the downside levels of interest until you have some 30-minute reversal candle or higher to stand on. This is so important. I'm glad you asked because a lot of the time I spoke with some people yesterday that were, grabbing these micro time frame reversals on these levels, wondering why it doesn't work. And it's like, it's not the context for it. Sellers are just so strong during this move that you may get like on NQ, you may get like 4 or 5 point bounce, and then it's right back into new lows. Gets into the next downside level of interest. You try it again, and it's right back into new lows. So that's a great question. There's a scenario once this low falls out, I consider the floor is gone, and I won't touch any longs until there is what I like to call like stopping power, serious stopping power for the trend move lower. A lot of the times it's just going to be the 30-minute because we'll see these 15-minute bars just fail, right? They'll just point blank fail. So context, I consider this the context. It's so important for actually having the conviction in grabbing the lows. I mean, honestly, it has everything to do with this higher time frame.
Yeah, and that's interesting you said about the M15, because that first one that you had marked there at the 250 level,
right?
I actually got caught there. I was like, I recognized that it was selling off, and I was like, okay, I'm going to wait for some sort of higher time frame price action, and I got that M15 hammer, and then I tried to catch a high low on the low time frames, and I just got killed again. So
it happens. It happens. The best thing I could say about this kind of action is, try and identify where the structure is actually breaking down, where we're coming from as far as the structure is concerned. So as far as structure is concerned, I'm thinking about this as we get into the week, just like range, right? Once we and support, the problem with this is that, or the challenge rather, is that support is kind of like how we define support is is very loose. I mean, are we talking 322? Are we talking 360? Like that's a 40-point range between some of the lows in here. So it makes it a little bit trickier. The thing is that once, let me actually get into Wednesday's action here on the intraday, because there's a pretty clear and decisive break. I don't know why my charts are so slow here. Around noon on Wednesday, where once that happens, you do not want to be on the other side of that. And so again, typically, and the reason I say this is because I've just been, like you're talking about, you try and grab it at 255, it doesn't work. Or maybe you try a higher low there, it doesn't work. And you're thinking like, what happened here? We're in such a strong trend move lower that sellers, any pop, they just want to fade any pop here. So right around this time where you start to, this was kind of last hope for buyers right through here, right? I had even mentioned in the chat, like watch this structure, because sometimes what we'll see is a nice late morning base, right? You get volume point of control down here, price breaks higher. Anyone who's shorted late is trapped. We get a nice explosive move higher. The bottom just falls out of this thing. And at that point, like longs, they're not on the table. They're not on the table until we start to see either that higher time frame reversal or like a capitulation move, which those are so much harder to identify and they're not all that common. So I tend to just defer, like show me a 30-minute reversal signal. And then ideally, like yesterday was a good example, like a reclaim of then a higher level of interest, right? We had some higher lows through here that were pretty nice, but you can tell how price starts to trade is way different through here. Once we start to kind of clear 160, clear one of those more recent lower highs, right? Okay, there's a higher low. There's some action through here that kind of makes sense.
Yeah, I actually ended up trading that high low, that first one there at the bottom that you just showed. Like, yeah,
over here, yeah, nice.
Yeah, but I was so beaten up by that time, and so I was just trading sim. But yeah, I could recognize there that was a good time. Like we had found support, we're making higher lows, and we had broken back above the 160 and reclaimed that level, and we were holding that as support. So yeah, that was actually a good time to get long.
Yeah. I mean, just you use yesterday's action as a way to create a framework for yourself to identify, and you could do it differently than me, but again, what I do, this is just so important, so I'll cover it again. We want to just know, like, with the structure, where is the floor going to fall out, right? And where is like the line in the sand for longs? And again, for me, it was right through here. Once it failed around noon, it was like, oh no, I've seen this before. I'm not jumping in front of this thing. No way. But it's such a different context than the Monday trade you were asking about. Like I see something like that. And don't get me wrong, the setup on Monday can fail, but I draw my conviction from just looking left on the chart. Like, where do I know buyers have already showed up before? Okay, it's right here. I have a level there. Let me jump in. Make sense?
Yeah, no, totally. Thanks,
okay,
Carl.
Great,
Appreciate you spending some time going through that.
Yeah, you bet.
Appreciate
You
it.
bet.
Thanks, mate.